Hey, what's going on, guys? Welcome back to the channel. In today's video, what we're going to be talking about is the fact that I desperately need a haircut. We're also going to be covering my stock moves that I'm making for this week. We've seen a lot of movement on the stock market with tech stocks, big tech companies that are now entering correction territory. So I think there's a lot of potential for money to be made in the long term, and that's all I'm going to be talking about in this video here today. So let's get right to it. All right, guys, welcome to the channel. If this is your very first time here, you've never been here before, well, my name is Dalton. This is D-Lits TV. On this channel, we talk about all things investing. And what I like to do is share my moves on the market so you guys get some real-time analysis of what's going on through my mind for the investment picks that I'm making. So what I want to do first is jump into the Robinhood investing application. I'm going to be talking about a few different things here. Primarily, what we're looking at here is my dividend portfolio. This has a lot of my dividend holdings. It's not all of them. I also use Webull investing as well. But looking at this portfolio, I've really structured this to kind of hedge against a failing market, hedge against a market that starts to crash or go down. And basically, this is supposed to be less painful when that happens. And that's exactly what we've seen with all of these tech heavy companies that have been dropping in price and all this market movement that's been going on. This portfolio has been relatively stable. It's still dropped a little bit, but not nearly as much as what's been going on that side of things. So if you look at it over the past day, we're recovering a little bit, up $167. Over the past week, we're down $75, and over the past month, we're down $570. But then over the past 3 months, we're up $271, and over the past year, up $2,188. So there is a lot of potential money to be made in the short term, but I want to talk about some of the holdings that I have that I've seen some solid movement from. Now, one that I've always talked about on this channel in many different videos is SPHD. And if you click into SPHD, you're going to realize the price right now, $41.76. It's almost at that pre-COVID value where it was hovering around that $43 price range. And all of this time, when the price had dropped, I had been investing. So I started investing in SPHD before there was a drop, so around $40. Then it dropped, and I'm like, all right, I got to front load. This is a really good time to get in, and then it's likely going to recover where it was pre-pandemic, and that's exactly what we've seen happen. So with SPHD alone, I am up $351 or 15% from SPHD. Now, so many people were saying, why are you not targeting a growth ETF, a growth fund that is going to fuel your portfolio? And my argument has been that because of this significant drop, I could see this recovering back to the levels it was at, and I could have a potentially decent gain off of that as well. Now, on top of that, this also pays me dividend payments as well that I just reinvest. So every time that happens, I'm increasing the size of my investment in SPHD. So I guess what I'm trying to drill home is that there is buy-in opportunities for even value companies, right? Even ones that you think is just going to maintain value over time. If there is a dip and you see it recovering, hey, that's a pretty solid time to buy in, and you can make a lot of money off of that. This is just one example. There's a number of different ones in my portfolio that I've been doing this with. AT&T is one that I have been investing with anytime the price is really below that $29 mark. And I've been drilling costs down. And right now I'm at $29.50, but I'm finally positive on them. And things for AT&T are looking pretty good in my own mind. I believe analysts are saying the price target's around $31 to $38 on the high end. And on top of that, getting around a 7.14% dividend yield. I mean, you can't really beat that. So that's what I really love here. My goal with AT&T is to get 100 shares, currently sitting at 75, but that way I can start doing covered calls and make a video on that, and that's going to be coming soon. Now, I was initially going to be planning on putting more money into AT&T, but you can see the price has gone up, and it hasn't really seen a dip over the past week. It's actually up 7%. So a lot of the stocks that I've been investing in have had really solid, weeks to a month here. And that is a lot because I'm not necessarily tech heavy like most investors have been. And so when I look at this portfolio, it's doing exactly what I structured it out to do. There's a number of different stocks that I could look into and show you the similar results to SPHD and AT&T there. But basically, when the market dips or when there's certain sectors or industries that are really struggling, I'm not too heavy anywhere, so it shouldn't affect the overall portfolio all that much. That's exactly what that's been doing. But these are not the investments that I'm making this week. And I want to cover that actually in the M1 Finance application. All right, now listen, before I talk about the exact moves I make, before I talk about what I'm investing in this week, I want to cover real quickly something that I built out over this past weekend. Now, if you didn't know, I do have my own personal website. I decided to buff that up. If you want to check it out, sign up for the newsletter. You can go ahead, head over to the website, dlitstv.com. I also created a Patreon page. Now you can actually give back. If you guys like the content that I'm providing, you take away anything from it and you decide, hey, you know what, you want to help support the channel, you can do just that. There's one tier set up currently. I look to expand that in the future. $5 a month. It basically gives you access to a private Discord channel where we can connect more on an individual one-on-one basis. And you can also get access to the community of like-minded investors. Now, I'm trying to build this out more and more. I'm going to be building the Patreon page up as well. So there's a lot to come in the future. And if you guys wanted to support the channel, just go the extra step to help me out, then that is one way you can do it. And if not, guys, that is completely fine. You guys support me enough on this YouTube channel alone, just coming back, engaging, hitting that like button, making sure that you're subscribed to the channel. It means so much to me. And yeah, anyways, I wanted to just make that quick note and let's just jump right back in. All right, guys. So now that we're in the M1 Finance app, I just want to mention this is a portfolio that I constructed maybe 2 or 3 weeks ago. I put out a video. The link to this portfolio will be in the description of this as well. And what I want to just mention is that, guys, I am not like a financial advisor. I'm not the best when it comes to investment picks. I like sharing what I'm doing and showing you guys what's going on. This is a brand new portfolio that I decided to structure. I put $2,500 in to begin with. I've invested an extra around $700 as everything has been dipping. And you can see right now it's down 21%. So what I'm looking to do, these are a lot of growth companies that I'm targeting. They're higher risk, but they potentially could have a higher reward in terms of return in the future. Now, I've structured out a couple of different categories here, and basically every time that I invest, my money gets distributed automatically between each company that resides in here. Now, these ones don't focus on dividends where I usually do focus on dividends. So you have to understand the style that's being used here. But if you jump in, you're going to realize that most of the stocks in this portfolio are actually down, and they're down quite significantly. So Tesla, for example, which is the biggest holding, is down 26% since I invested in it for this portfolio. So what I'm looking to do is take my money, invest in a lot of these different companies. And if you guys think that you have bad luck when it comes to picking stocks, I created this portfolio, like I said, around 2-3 weeks ago. Every single stock except for Wayfair is down. So that's absolutely crazy. Like that's awful picking. And I guess that just goes to show you don't want to blindly copy someone on the internet for what they're doing, because you know there's a lot that needs to be put into researching these different companies. And this has just been because the overall, tech space and the types of investments I'm trying to make here have just been getting absolutely hammered over the past few weeks. Now, I do expect them to bounce back, and a lot of this is because of the correction territory we're in. Some of them have already made quite a big bounce back from when they were even lower than this. But what I'm just saying is, you guys, you want to be careful when you are copying somebody online. You want to make sure that you are making your own investment decisions. And when I look at this portfolio that's down 21%, just know my mindset is not, hey, I'm super worried about what is going on here. My mindset is, yes, keep on dropping. Let me get more money in. Let me drive my costs down. So that way, in the long term, when these companies start to turn around, everything is going to be looking good for my portfolio. I'm going to make a lot more money from it that way. And again, if you just look at a lot of the companies in here, it's not absolutely absurd. Most of these you're still going to hear of. So jumping in here, you got Tesla, Enphase, NEO, Plug Power, First Solar. These are a lot of, well-known companies. If you jump into the e-commerce section here, Etsy, Etsy, Lemonade, Shopify, Peloton, Chipotle, eBay. These are all, again, pretty common names that aren't really going anywhere anytime soon. They might keep dipping a little bit, but that's just going to lower my buy-in point and allow me to make money so much quicker in return. So this is a portfolio that I haven't talked about in a little bit, but one that I am making the most moves in right now. So again, I invested $400 last week into this, $300 this week. And again, I'm going to be doing the same thing next week as the prices start to stable. Maybe they're going to drop lower, maybe they're going to bounce back, but I'm still planning on dollar cost averaging into this portfolio. Now, on top of that, if you guys didn't know, I also structured out a Roth IRA. What I'm looking to do is get $6,000 into this Roth IRA before the deadline of 2020. So the 2020 deadline to contribute to a Roth IRA is April 15th. Which means that I can contribute up to $6,000 before then, and then I could contribute up to $6,000 after that date to go towards 2021. So if you guys didn't know, Roth IRA investing, I put out a new video on that. Go check it out. But that is basically what I think is the best way to invest, not only as a dividend investor, but just in general. The benefits of having a tax-free growth account is just incredible. So you just want to make sure you understand what a Roth IRA is. Again, check out that video if you know nothing about it. And yeah, so anyways, guys, that is all I have for you in this video here today. Pretty straightforward, pretty easy to understand what I'm going through right now. But if you do have any questions, make sure you leave them in the comment section down below. I'll be sure to get back to you. Thank you so much for checking out this video, guys, and have a great day. I shouldn't have made this portfolio.